The North American forex market is showing a period of cautious movement as economic uncertainty continues to weigh on investors. The US dollar remains resilient, largely due to strong labor market data and persistent inflation pressure, which is keeping expectations of higher for longer interest rates alive. The Canadian dollar, meanwhile, is trading sideways, pressured by weaker oil prices and mixed economic signals from the Bank of Canada. Despite hopes for rate cuts, the Federal Reserve has held a hawkish stance, contributing to continued strength in the dollar against the euro and the yen. This has created a risk-off environment where traders favor the US dollar as a safe haven, particularly amid global geopolitical tensions and weak economic data coming out of Europe and Asia. In Canada, inflation has shown some signs of cooling, but not enough to trigger aggressive easing. The loonie is sensitive to commodity swings, especially crude oil, and recent drops in energy demand have kept CAD suppressed. The USD-CAD pair is hovering near key resistance levels, and traders are watching for breakouts linked to GDP and employment numbers. Shifting to crypto markets, Bitcoin is facing headwinds as regulatory scrutiny increases and institutional capital remains hesitant. Bitcoin has struggled to stay above key psychological levels, and short-term holders are contributing to heightened volatility. Despite this, long-term fundamentals remain strong, with growing Layer 2 adoption, ETF flows, and a halving tailwind projected for next year. Ethereum continues to underperform Bitcoin, with concerns around high gas fees, slow ecosystem growth, and the lack of a clear catalyst. However, some optimism remains due to scaling upgrades and institutional DeFi interest. The ETH to BTC ratio remains under pressure, reflecting weaker risk appetite for altcoins. Altcoins across the board have taken a hit, particularly meme coins and high beta tokens, as traders retreat to blue-chip crypto assets. The total crypto market cap has contracted, with volumes falling and fewer new retail entries. Stablecoins remain strong, showing flight to safety within the ecosystem. Crypto and forex markets are both being shaped by macroeconomic narratives. Inflation, interest rates, and risk sentiment are common drivers across both spaces. As central banks in North America continue to navigate inflation targets and growth concerns, both the US dollar and Bitcoin are likely to remain central to capital preservation strategies. Looking ahead, expect continued volatility as markets price in economic data releases and central bank messaging. Traders in both forex and crypto will need to remain agile, focusing on technicals, sentiment, and global macro indicators to stay ahead.